We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your real estate investment podcast and YouTube channel. We are excited you're here. Today, I am here with Marcus Long of A Long Legacy Capital. Marcus has been serving in the military for several years, and first of all, thank you for your service, Marcus. We appreciate that. And he is looking at the way to develop cash flow in order to transition his family out of the military life as he moves forward. So again, Marcus, thank you for your service and welcome to the show. How are you today?
I'm doing great, Casey. Thanks for having me. I appreciate it.
Yes, sir. Absolutely. We're always tickled when we can hear from folks who have given back to all of us in different ways. And so the first thing obviously we want to kind of hear about and what we like to talk about in the show is where people were when they kind of started saying when you started kind of figuring this thing out, saying, hey, wait a minute, how are all of these ultra wealthy becoming ultra wealthy, and they're all saying the same thing? It's through cash flow. And how does that, like where were you when you first kind of started figuring that out? And then obviously what led you to where you are today?
Yeah, thanks, Casey. It's kind of it's a bit of a journey, and maybe I didn't learn quite as quickly as some of the others that are doing it in a couple of years. But I've been in the Navy for a little over 21 years. As you mentioned, I'm getting ready to make my transition out this summer / fall. And I bought my first real estate about 17 years ago. And
Oh, wow.
had been enlisted in the Navy. I'd been selected to be an officer and was going back to college at the University of Missouri. And I'd always kind of already had kind of a business with my dad growing up and stuff. So kind of enjoyed finances and some things like that, and was going to major in finance at college as well. And so I think I knew kind of, that owning home ownership and things was kind of this like longer term, path to wealth and stuff. And so that's kind of what led me to buy my first home, which I house hacked and later turned into a rental 17 years ago. So I had that like taste of, the cash flow and stuff like that. But I didn't go hot and heavy. I was doing some pretty operational things in the military. And so I just started, over the course of a number of years, I picked up a few more single family rentals. And really just in the past, probably about, 4 or 5 years ago, as retirement was on the horizon, and I was kind of debating like, when that time comes, am I going to transition into, a contractor job or stay in for a little bit longer? Do I want a W-2? What do I want to do? And so, I kind of started looking at real estate as an opportunity to not, roll into a W-2. And I started picking up a few more single family rentals kind of back in Missouri, the area I was from originally. And yeah, a story I've told a few years ago, I have a 7-year-old and a 4-year-old, and I kind of had a gut check aha moment a few years back from my daughter, who I think was probably around 4 or so at the time. And it was kind of one of those moments where I was like, I'm absolutely going to off ramp and get ready to leave the military. But when I was honest with myself, I knew the single family, some of the stuff that I had done wasn't enough to replace my income, the difference in my pension and current income from the military. And so
Sure.
I joined.
It's tough to scale that too. It's tough to even move from where you were and and get any kind of a vision for how that even looks down the road.
It is, and I hadn't been up to that point, had not been super intentional about it. It's kind of opportunistic. about picking some up, and ultimately had about 15 doors. But even at that, and a lot of those were in rural Missouri. They're not like huge cash flow cows and stuff there. So yeah, I joined as I moved over to England a couple of years ago. I joined a mastermind for active duty and veterans called the War Room Mastermind, and that's what kind of exposed me to some different strategies. I'd done Airbnb, once, and like house hacked, and did a couple little things like that, but mostly it was single family buy and hold stuff, and it kind of opened my eyes to different strategies, and that's what kind of like led me into the multifamily space. And I invested as a passive investor on a few deals, and then as I got to learn and know more about it, made the transition to a general partner.
Oh man, that's great. And so the single family doors that you owned, and of course we've had some other folks on here that have either are either active duty or have completely transitioned. I don't know that I've ever had anybody on the show that is right like in this phase where you are, where you're like, hey, I'm transitioning out and this is going to be my new career. But the single family doors that you ended up with, were those properties that because the reason why I bring up the other folks that I've had on here is one guy was getting he was moving around and getting VA loans, living in the house for a while, and then moving out. Now, obviously, I don't think you lived in 15 different houses in rural Missouri, but how many of those, if any, were tied to your ability to get a VA loan?
Yeah, actually, only one of those rentals. That was the very first property that I bought 17 years ago. I did buy another one a few years back with a VA loan, but we actually sold it when we left there.
Okay.
And we lived, I think, that was kind of the historical guidance to military people, to buy one everywhere you move around and stuff. And I don't necessarily think that's always the best advice. I lived in Hawaii and San Diego and stuff, and some in Denver. It's pretty expensive markets, and that doesn't mean you can't find good investment deals there. But what I think too many people would do is buy a property that they wanted to live in, and then hope the numbers worked out to turn it into a rental when they left, right? And so if that's kind of what you want to do, you really have to analyze that as a rental when you're looking to purchase, the property up front.
And so, most of the folks here locally that do that, or that have ended up renting, and again, my listeners know I always bring up our local military market and how thankful we are around here for their presence because of the economy that they bring and so on and so forth. But what the majority of those folks who ended up with rentals was even far more unintentional probably than you even were when you were buying these, and that's the fact that the homes were not worth what they owed on them when they got orders to move. And so when they got orders to move, now they're sitting there saying, and anybody that knows military movement stuff, unless you're way higher up, you don't get any kind of compensation package for moving or anything like that. So these guys were basically just hung with these houses, saying, okay, what's my way out of this? And the only way out of it was to rent it, and in hopes that either it covered the payment, almost covered the payment, or was something close to there to keep them out of financial ruin. And as a real estate agent close to that, and having been standing right next to several of these situations early on in my career, I'll tell you what, it really got to the point where I have been known to advise military couples or families or whoever comes in here that if they're just starting out, I mean, like, that needs to be the furthest thing from their mind is buying a house. And again, that's basically me taking a commission check out and tearing it up because they're qualified, they're ready, they're good to go. But they're like, hey, I'm here for a max 3 years. Max 3 years. That's if they don't get orders for in 2 or 1 or 18 months.
Over the past couple of years, sometimes we've got a little bit fortunate with the market, and people think, it's always going to appreciate that much. And sometimes
never going to be another bad day.
Yeah. But there's there's a wide variety of military markets and stuff out there. And so it's not black or white. I think that people just have to have the knowledge, and they need to know what their goals are. Am I looking for a home for myself or an investment property, and be able to think about analyzing that as you go into it,
Sure.
you know, before, it's time for you to move and then making that decision.
Yeah, and then like you said, analyzing it from the beginning is really the most. It's almost to a certain degree, and then it's almost like I don't want to put the burden of saying underwriting something for somebody like on a single family purchase for themselves, but essentially it's the same thing. I mean, it's saying, hey, is this financially responsible? Does this financially make sense? Is this something that's going to better myself and my family, or how is this going to look on the other side, whether I want it really bad today or not?
Mm-hmm.
It comes down to what is the sense, and the other part of this equation that comes into play, and so much so comes into play many, many, many times, is the VA funding fee. And I say VA funding fee specifically because I feel like I'm referring directly to the VA loans and the VA home buyers that we've dealt with, that I'm talking about. But that VA funding fee, and of course, the amount has changed over the years based on the the insurance needs of the VA. Because a lot of people say, well, if a military person moves out and they get foreclosed on, it costs the taxpayers all this money. When in fact, it really, at the end of the day, there's some logistical fees and stuff. I'm sure that it probably costs the taxpayers, but at the end of the day, a lot of people don't realize that those military folks, the VA folks, have paid a funding fee when they close that home loan, and that funding fee goes into an insurance reserve that is then paid out if it has to be foreclosed on and there's a loss. And so, again, I hate to get off on single family stuff like this and very basic VA borrowing guidelines and stuff, but I just feel like it's necessary if there's anybody out there listening that could potentially be saying, hey, this may be my track to doing this, but there's some risks there associated. Now, when I forget where you were when we'll go back in the conversation here about where you were when I so rudely interrupted. I just wanted to bring that up, but when you were kind of getting, you said you sold one, the last VA home purchase you bought, you ended up selling it. Is that correct?
That's correct. Yeah. I mean, we were only there 3 years, and it did turn out, that we came out okay, selling it and stuff. It did appreciate some, and of course, again, that was good timing in the market and stuff. So we did sell that one. But other than that, I was generally buying rentals back in Missouri, generally around like where I grew up and an area I was familiar with there. So that's kind of where my
Sure.
single family stuff was. And some of those I was like working with my brothers, and we're geographically separated. And as I was looking kind of to getting closer to the transition that I mentioned and stuff, there's some of those more rural areas, there's not a lot of professional property management. We were managing some of the properties ourselves. And, in our heads, we were thinking we're starting to do this to create like this passive income that we talk about and stuff. And it was anything but passive, And so we just, as I got exposed to, the multifamily stuff and involved with some of that, I kind of went back and talked to them, and I said, hey, we can produce, equal or better returns than, some of the stuff we're doing right now there. And I could help them be more passive. Like, I'm being a general partner, so I'm not, that's not necessarily passive either. But so we're starting to offload some of those single families and, roll the equity in onto the passive side of some of my syndications.
Awesome, man. And then once you start creating it, isn't it funny how those, when you start feeling that passive income, like when you start getting those checks and you're like, wow, it really was that easy. I mean, isn't that funny how it kind of becomes intoxicating in a way, because then you're like, well, okay, if I did that once, I can do it 10 times. Okay. Then you get to do it 10 times, and then all of a sudden you're like, I can do it 1,000 times. And then, you know what I'm saying? So it just becomes, a way of life where.
Yeah, that's been really
Go ahead.
rewarding for me also, is, because I mentioned like being a finance major, and I've always enjoyed talking to people about personal finances and helping educate and stuff. And so it took me a long time to find, multifamily, despite the fact that I had real estate investments. And so, once I had my passive investments myself, and then became a general partner, I partnered on 3 syndications in the past 10 months. And, I've been able to share that with friends and family and stuff. And, a lot of people just don't know that opportunity exists. And so to be able to share that and to teach them and open their eyes to other opportunities, alternative to the stock market and things like that, has been really rewarding for me as well. And as you mentioned, kind of the addictiveness of that, some of them have the first deal, they start seeing the distributions and, they're already asking like, hey, when's the next opportunity available? So, but it's,
we want 10 more of these.
Yeah, it's been, as I went to my transition, that was like one of the pieces, it kind of like pulled me towards multifamily. Like I really enjoy the impact we can have on the communities that we invest in, making it really a home for our residents, having events and things. The impact, as I mentioned, kind of like the education and providing value to our investors. And then, and it's, even though, as I mentioned, being a general partner isn't passive, it does create a lot of like flexibility for myself and my family, because I'm doing this,
Sure.
with a computer and a phone from England right now, right? And so while there's some things that are easier to do in person with people, it's certainly possible, to do it with a computer and a phone. And so it just provides a lot of flexibility for me to schedule around and, be more present with the family, take the kids to school, to be able to travel and take the work with me and things that. So those were a few of the things that really stuck out to me and kind of, pulled me towards the multifamily space as we make this transition.
Sure. Now, so let's transition this discussion towards of course, so we've covered the early years of single family, your first VA purchase 17 years ago, and then which then kind of branched into several other, rental purchases that I think you said you and your brother or brothers had kind of owned and managed and whatever that case is. So now you've transitioned towards the multifamily, towards the LP and GP kind of scenarios. Where are you at, like right now, today, as we talk? How many doors do you have? Where are they located, and what do you have going on as far as that's concerned?
Yeah, so first I invested in 3 syndications as an LP, and it is a little over 300 doors across Alabama, Oklahoma, and Colorado. And I chose to invest with people that I had met in the military mastermind that I mentioned earlier. And, because I was connected with those, I met with them on a regular basis. They were an arm's length away from me. I could kind of learn and have conversations. And so I invested in 3 deals there. And then, as I kind of decided, like, I wanted to transition to be a general partner, and that was kind of my intention as we move out of the military and stuff. I approached one of them, kind of talked to them. We had known each other for a little while at this point. He knew my real estate experience. We'd managed some of our own properties. I talked about, kind of asked them like, hey, what would bring value, like capital raise wise and things to partner on a deal, like, or can I contribute in an asset management way and things like that, and started having that discussion. And so it closed on the first deal I did was a 100 unit in Pryor, Oklahoma, just outside of Tulsa, last July. And so since then,
Now this is as an LP.
That was my first one as a general partner. Yes. So
First one is a GP. Okay,
yeah, so
cool.
Prior to that, I had done 3 as a limited partner, and that was my first one as a general partner. And then, I kind of met some new partners and stuff based on that particular transaction, and we did an 8 unit down in Arlington, Texas, that we did a short-term rental conversion on, because down the street from the stadium. Following that, a 75 unit in College Station, Texas, just near Texas A&M, in November, and then a 121 unit in Houston, just here in February. And so,
wow,
yeah, it's been a pretty quick past year, I guess.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
Now, where so as a GP, where have you are you still kind of working through the friends and family part of your investor book, or what are you doing to gather investors for each of these deals?
Yeah, so the two of the syndications were 506Bs. The last one in Houston was a 506C. But
Okay.
even that, largely a lot of my investors were still, friends and family that just happened to
Yeah.
be accredited investors. Yeah, so
Yep.
starting out, I think a large bit of my investor base was made up of people that I've served with, over the past 20 years. So some of them are
Sure.
military friends. Some, might be, government civilians or things like that I happen to work with. And so that was a lot of my initial investor base. And kind of as we've shared, some of that, like those investors have talked to other people that they're stationed with and made referrals, and we kind of connected and had conversations there. And so that's kind of and I've tried to do things like this, talking on podcasts and stuff. And whenever you're able to share that, it begins to
Sure.
kind of expand. Also, I've in addition to the War Room Mastermind for military, I've also joined seven-figure multifamily, which is masterminds focused specifically on multifamily. And so, I think in some of those groups and stuff like that, you kind of get connected. Like, well, everyone in there is looking to be a general partner. Some are interested in investing as limited partners, as part of their educational pathway, or some of them might have IRAs and things that they want to invest with other people that they kind of know are in the group. And so that's kind of some of the ways that it's expanding. And I try to engage a lot, whether it's Facebook or Bigger Pockets or things like that, to help other military members. I kind of see a lot of times where
Sure.
people are talking about, like, hey, I really want to get started in real estate, but I'm overseas for the next 2 years. How can I get started? And so,
How do I
you
do it?
know, yeah,
Yeah.
I try to, leverage my experience, both from being a long distance investor over the past 20 years to now like living overseas, and be able to provide value and stuff. And a lot of times, that kind of, starts up a dialogue, between you and stuff. And some of those people have become investors as well.
Well, one thing that you said, and I know it was just something that you mentioned probably in passing 1,000 times, but I want to go back to it because it's so ultra important to where we are as GPs looking for investors. And you said the letters IRA, and I think that a lot of people that could be listening to this or are listening to this, this is the scenario. I'm in just for instance, say it's military folks, for instance, because that's what we're talking
Mhm.
about. And I'm stationed in wherever. I don't have 50 or $100,000 to invest in your deal. And a lot of folks think that that's just okay. I don't have that money. Let's go on with life. Let's keep cashing these paychecks, keep moving on. But the letters you said there, IRA, a lot of people don't realize that what that process looks like as far as saying, hey, I can go buy real estate with my IRA or 401k or whatever the case is. But my question leading into this with you is how do you specifically educate people on that making them understand that that is how these people are doing it, most of the folks are doing? Because again, you take your average citizen of this country, they don't have 50 or $100,000 just sitting in their bank account. And again, a lot of people think that if they just don't have it, they just don't invest in real estate. But the fact of the matter is that they've got that money tied up with a financial planner somewhere that is, and so anyway, go tell us a little bit about how you educate people and how you bring that around full circle.
Yeah, so and I can appreciate that people aren't aware of that, because I myself wasn't really even familiar with a self-directed IRA until a couple of years ago either. And so it was kind of that same time when I was, getting exposed to multifamily and other things is when I kind of got exposed to some of this. And so, being a finance major and stuff myself, if I'm not aware of some of that, I know a lot of the general public isn't aware of
Yeah.
some of that stuff also. And so, I created a self-directed IRA myself. I've mostly done like private lending and some other stuff out of it, but I've been able to use my experience in transitioning to having a self-directed IRA in ways that I can use that to share with others. And one of the most important things I think that I do is, I've hosted actually the CEO of my self-directed IRA custodian on for like webinars and things. So I've invited, my family, my friends, other investors, and just I've had her kind of do a presentation, provide some education, and like do some Q&A sessions, right? So I can talk about the education I've learned, how I've learned to use it, but I can also bring in other experts in that industry and stuff to provide some of the details or answer. A lot of us have different
nail down.
Right. A lot of us might have unique questions about our scenario or situation, and those experts might be able to to address those more directly and stuff than I can. So trying to provide access to experts that I have a relationship with to educate my network as well.
Man, that's awesome, because, and that's the biggest shortcoming of this whole really business in general is just education. And it's just simply telling people that, hey, you don't have to sit in there in a mutual fund that's making 0.5%. I mean, you don't have to just sit there just because that's what the majority of financial planners want, or that's what the majority of those folks. I mean, because obviously, if you start self-directing that money into other types of assets, they don't get paid, and obviously that's why they're not saying, hey guys, you can make more money doing this, and this than you can what we're doing over here. And so, with that being said, but again, people don't even know where to start. And I was a lot like yourself. And my background in I ended up with an agricultural economics degree in college, but the amount of finance and stuff that I took in college was massive. And there you're saying you ended up with a degree in the stuff, and you were like, wait, what? Huh? And I was the same way. I was like, what do you mean? So a lot of folks don't think that just because somebody doesn't have that certified financial planner or whatever that they call themselves behind their name, that they can't really find deals and make money. But the thing is that this real estate stuff makes money because and I always go through this scenario on this show when people talk about, okay, well, what about 07, 08, 09? Everybody lost their shirts, right? But the fact of the matter is that today, sitting here in 2022, I would take any house in any location, basically, that priced at a 2006 price. And even though we came through that, who wouldn't take something that was at the value that it was in 06 and where we are today? So what does that tell me? That tells me that we've gone nowhere but north. And again, the value of the dollar and the inflation, all that comes into play. So, real quick, I want to touch on before we end the show today. You said you're currently in England, like as in England, in rural England for that matter. And how does this management of these assets and such, what does that look like from where you're sitting at right now?
Yeah, so I think this is one of the great things about multifamily and stuff too, is it's such a team game, a team sport, and that can play. You don't have to even be this far away. You can all be co-located together, and it's still a team sport, And so, somebody might be like, hey, I have a great network to raise capital, but I don't necessarily love sourcing deals, or I think I could provide a lot of value being an asset manager, but I don't love talking to brokers, whatever, and so you can find other people that complement your skill sets and stuff to do that. And I think that's one thing. Well, I do have partners that live overseas as well that are very successful asset management. It does take a lot of systems, processes, and like relationships with people local. And so in each of those deals and stuff, we do have some partners that are either local or within a quick day's drive to get to the property to do that. And so I have some asset management responsibilities on some of those properties, not all of them. And then, on some of those, just my partners are responsible for that. So on each one of those deals, like I raise capital and do investor relations. Some of them I have some asset management responsibilities. Some I sign on a loan or put earnest money or things like that. And so it's kind of a deal by deal situation. But yeah, so there's I have excellent partners that are helping with the asset management. We have some fantastic, property management partners locally on the ground that, we've gone and met and stuff that help us manage them as well.
Awesome, man. Well, talk about making moves, brother. I mean, you're sitting in England, you're active military, you're doing that, but then at the same time, you've got these, we've covered education, we've covered processes, we've covered team building. I mean, those, in my opinion, are the three pillars of doing what you're doing as it is, man. I mean, that's just, it's awesome, man. That's on a different level. I mean, and then adding the element of however many thousands of miles it is over there from the actual assets that you've got. I mean, man, that's pretty killer. And then, but like you said, the investor relations part of it is what we specialize in as well. And so it really kind of brings an element but just, man, the fact that you're doing it from over there and while serving our country is just goes to show me, as well as it should show the audience, that you can do anything you set your mind to any day. I mean, that's what you do. So, well, Marcus, I want to kind of, yeah, man, I want to kind of end this out here with, if anybody in the audience is potentially active duty right now, or even in a spot where they're like, hey, man, I really connected with you, and they want to reach out to you to either become an investor or possibly get on one of those webinars you talked about, how can the audience reach out to you and get in touch?
Absolutely. So yeah, the best place, probably is alonglegacy.com. It's kind of a one-stop shop for all my stuff. You can set up a phone call with me, send me an email. My social media and stuff is there. So yeah, if there's anything, I talked about that, you want to dig into a little more, reach out and connect. I'm happy to share my journey, go into more details on different parts of it. If you want a copy of, I have recordings of the self-directed IRA webinar that we did a few months ago with the CEO. If someone wants a copy of that, they can, shoot me an email. I'll hook them up with the link to get that as well. Happy to help.
Awesome. Do you want to, so people just go to the website and they can send you an email directly from there, right?
Absolutely. And if it's Marcus at alonglegacy.com.
Awesome. And that's ALONGLEGACY.com. Marcus, I can't tell you, I always tell people at the end of the show how it's hard. I know how hard it is to carve out 30 minutes of your day to come in here. And the time we have the pre-show and the post-show and whatever, that kind of stuff, it's an hour. But man, I really can't thank you enough for taking your time to be with us and our listeners today. And hey guys, if you need something from Marcus, he gave you a way to contact him. And again, Marcus, thank you so much for your service to our great country. And we hope everybody has a wonderful rest of the day. And thank you for listening to the Cash Flow Pro. Cash Flow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.